We're rolling. Hello and good morning on this beautiful rainy morning.
At least it's not snow.
Novelty. Anyway, it's Monday, January 27th, 2025, and we will get into the week that was and then talk a little bit about the week to come. The format's going to change slightly as of this morning. We had kind of some breaking news. Not really, but everything going on with this AI platform, DeepSeek. So we'll get into that. We'll talk a little bit about that and what our thoughts are on that process. Anyway, we will hop into the fine print. I'll let you hop into those disclosures.
Please note this podcast is for informational purposes only and does not constitute financial advice. Always consult a licensed financial advisor, such as ourselves, before making any investment decisions.
All right, so the week of January 20th, we had the S&P up 1.74%, the NASDAQ up 1.5%, Dow Jones up 2.1%, and the Russell 2000 up 1.43%. Gold was up 2.56%, silver up 1.09%, 10-year bond was flat, and then Bitcoin was kind of flat. It was down like 10 basis points, a little lower than that. So if we pull up our chart, like we talked about last week, the year-to-date performance, S&P's up 3.7%. This is also as of Friday, so we're not taking into account the market drop that is currently happening as we're speaking on this podcast. But 3.73%, NASDAQ up 3.6%, Dow Jones up 4.4%, 3.5% for the Russell 2000. Now, here's where it gets really interesting. The commodities. Gold up 5.58% on the year, silver up 6% on the year, 10-year bond flat again, and Bitcoin up 10.7%. So
gold's really been outperforming, and we have seen calls by the Trump administration, which predictable from their first term, and then also comments during the campaign for a desire to get rates lower. Several reasons for that, but we have seen gold and Bitcoin respond accordingly. Now, we haven't seen the 10-year respond accordingly. So very interesting developments on that front. And before we get into the breaking news of the day, talk a little bit about earnings. Had some pretty strong earnings reports last week. Came in pretty shocking. Some of the big banks did really well.
Yeah, we're about to hit earnings season hard. I was looking at that last night. This week alone, I can show the chart that I'm looking at here, but it's wild. It's not, it can't even fit on one page. I'll send you a screenshot of this that I'm looking at. But this is we are in earnings season, and it is officially here. Let me all right. I'm going to send this to you so you can see it, what I'm talking about. But it's quite a lot. So we'll have some tech companies. We'll have kind of a smattering of a lot. We've got SoFi, I guess. They did pre-market earnings and they missed. So that's one I know we've talked about for a little while. Down 9% this morning. So, unbelievably still up for the year to date. The earnings is going to be a big deal. That's going to be something definitely we're watching out for, and other people are watching as well.
Boeing's tomorrow. I don't think that's going to be. I mean, they've had a lot of troubles. ASML, chip manufacturer, Wednesday on the heels of the news today. It's going to be very interesting. Of course, we have Tesla post-market Wednesday. I've seen some reports that their new Model Y has received over 160,000 orders in the first week alone in China. So if they have some commentary about that, it's going to be very interesting to see continued market penetration in Asia for their products. Meta post-market Wednesday, interesting to see if there's any new developments there. These are, the S&P 500 and the NASDAQ, the top 10 companies are some of these companies that we're talking about. So even though, most of your investors are going to be focused more on what's in their 401k, the S&P 500, the major market indexes, your ETFs. These companies make up a good percentage of those returns. So it's interesting to pay attention to and kind of get a feel for how things are going. Microsoft, also post-market Wednesday. And I don't see, UPS Thursday, that's a good one for economic activity. You can kind of get a feel for what they're anticipating this year based on what they're seeing. Apple Now, here's something interesting about Apple. Apple slid, what are we, down 15% year to date?
Oh, yeah.
On Apple.
Yep. We actually had,
just before we started, I was talking about the new 16. Ordered a couple of those, should be in today. Biggest update for that is Apple's artificial intelligence on those phones, and you have to get the new hardware to be able to operate their new AI, and that goes for both computers, tablets, and phones. So just think about the refresh cycle that's going to take place. You know, if and when people really start, you know, because pretty cool stuff that's on there, especially with how you communicate with Siri. I disagree with that. I think that this is one of the reasons that they missed. I'm a huge Apple fan. I have been for a long time. All of my devices, my whole family's in the Apple ecosystem. I like the nice, cool stuff they've come out with. Trying to see if pigs are flying.
Apple has had an issue, and a lot of people talk about this with innovation. They've had the innovation issue. They're generally behind when it comes to features that they like to release. But the kicker is that they can be delayed with it because they generally implement it in a better way than their competitors. And what happens is a few cycles later, you see the competitors start to adopt the way that Apple did it. You see this all across the board with from phones, you know, back in 2007 when they had the first iPhone, operating systems. Now, Apple has borrowed a lot from Android and different operating systems for features that they were lacking, but they always do it in a different way, a slightly different way.
They slow roll it.
And they've done the same thing with AI, but I just don't think they've hit the mark. I think that it's, the creating the images and creating the emojis and all that kind of stuff is cool. What do you use it for? Do you use the Apple Intelligence on a daily basis?
I don't have the phone yet.
Oh, well, there you go. I do, and I don't.
Well, you have the new one?
Yeah. I don't use it that much.
Well, and aside from just Apple, I guess the product refresh in general for all hardware, all computer hardware is going to be, it's a refresh cycle unlike anything that's happened since the smartphone, I think, across the board.
Yeah, I mean, as far as them having to sell new devices, maybe. But
for everyone, Dell, HP, all those people.
The other thing is the Apple Intelligence is technically still in beta. So it's a very strange way for them to market the phone that is supposed to be all about Apple Intelligence. But it's a beta product. So it's not even activated on any new phone that you buy. You have to go into the settings and subscribe to the beta. And if they approve you, you'll get in.
The cameras are supposed to be really good.
The cameras on iPhones are always great. But specifically talking about the intelligence, the artificial intelligence thing, the AI, which is sort of the bandwagon everybody's going to jump on, I just don't think, I don't think that Apple has done the Apple thing with it.
Maybe because beta. And maybe because they don't have, this is going to, I guess we need to get into the conversation with DeepSeek. This may be the issue here with Apple in that they don't quite yet have the compute power to maybe roll out what they want to do.
I don't know about that. I mean, Apple's they're not hurting for money.
Well, it's not. I think it's infrastructure and energy, though. If they have to have just as we talked about for our friends in Louisiana, the the giant facility they're having to build and fill with all of this compute equipment.
That's true.
In order to try to materialize what they've been beta testing in the background. Possibly
has Meta made a commitment to clean energy like Apple has? Because their whole supply system is on, well, so they say, is on clean energy with solar panels and all that kind of stuff. So that could be a part of it, is that they don't really know how to do that and keep their promise on that side of it as well. Because, the other part of this is Apple is one of the companies that is kind of doubling down on the DEI stuff, even though all these other companies are kind of giving that up. You look across the board.
ESG, I'm assuming they're probably still...
Yeah, I mean, they're big into that. And so, there's nothing necessarily wrong with that in a certain aspect, but...
Well, I think if it naturally comes as the culture of your company, then you should, as they do, communicate to your shareholders. This is a big focus, and then execute on it. If that's the promise you've made to your shareholders, do it. I just think writ large, when you start trying to cookie cutter approach the cultures and all these different companies, you're going to have a different culture at Chevron than you do at Apple. And I think that's the biggest pushback away from the headlines.
Also geography, where you're located.
That's right. Yeah. And you're going to have different priorities and different cultures And culture is important for a company because you all have to work together well and seamlessly and focus on the goal at hand, which is essentially making your shareholders more money.
Now, the other thing that could be happening is Apple does have a relationship with OpenAI, which is the creator of ChatGPT. And so some of the commands require you to use ChatGPT services kind of wrapped in Apple's packaging. And so that may be something that they're kind of
and that's
willing
because I'm
to
pretty sure ChatGPT wants the background data to help train their large language models.
Well, of course, yeah. Well, of course, it's never. I mean, there's some monetary compensation being exchanged as well, but I think that maybe a part of them, because their culture is so strong around privacy, and that's, they make campaigns around it. They make commercials around the fact that privacy, everything happens on your phone. I think that their foray into having to rely on a third party is not something they want to jump into with both feet. Maybe it's like a patchwork type system until they could get their own language model up and running, if they do.
Well, let's talk about these language models. So this morning, a AI startup referred to as DeepSeek, which was started by a Chinese hedge fund billionaire. Apparently they have billionaires in China, if you weren't aware. I think they're in name only because the Communist Party pretty much runs all the important industries. But big hit to the market. NVIDIA, big hit downward today. And they're saying it's because this company is stating that they've been able to essentially make a better chat GPT for only 5% of the cost. But there's rumors that this is not really true. I watched a video from this morning, Andrew Sorkin on CNBC, saying that, hey, he's got sources saying they had to use 50,000 NVIDIA GPUs to even get it to this point.
Well, the thing is that they're not supposed to have access to that.
To the NVIDIA GPUs.
That's correct, yeah. There are sanctions and things in place that don't allow China to have access to that. Now, similarly to what we were talking about a couple of weeks ago when we were talking about the China's response to tariffs would be that the Chinese companies just sort of mask themselves as where they're located. So they move their operations to Taiwan or Singapore or somewhere else that's not going to get those tariffs. This is sort of what's happening with this. So that China is setting up shop in Singapore or Taiwan or any number of places, and they're receiving these shipments of these chips and then using them to create this. That's not proven. That's just speculation at this point.
Well, it's all speculation. And this is when you've done this for as long as we have, and you can see the distinct correlation in a negative news headline and what happens pre-market and then at the market open. There's a lot of manipulation that goes on to play on people's emotions to get them to either, I'm sure that some insider somewhere knew this info was going to drop, and they shorted NVIDIA over the weekend.
Yeah,
had a short position.
Go look at the options
and
chain.
Just boom, hit it. And had a commercial bank was able to let them, investment bank, figure out how to short it over the weekend, whereas us plebes, us common folk, aren't able to do that. And it creates panic and fear. And what does that do? That just creates a great buying opportunity for long-term investors.
Yeah, when it kind of works itself out. But here's the deal with not even the technology from a technology standpoint, because there are obviously people who have access to this platform and are using it and are able to do the comparisons to ChatGPT and Grok and these other kind of language models and understand that it's maybe faster or it gives better data or more up-to-date information. That's all fine and good, and I'm sure it does work that way. But yeah, to your point, where the controversy is on the back end of how they're able to do this, because they're apparently able to use a fraction of the energy and a fraction of the compute power to get even better results. And it's like, really, is that really true? And you can see people are posting videos where they'll go in and ask this language model a question about China, or a question about the president of China, or a question about something that Chinese officials don't necessarily want the public to know about, and it prints the answer just like it does in ChatGPT. It generates it, but then it erases it all and says, sorry, this is outside my scope. So already, baked into it is the censorship that, people are already kind of concerned about.
Yeah. This is, like you said, going to have to work its way through, because I'm very suspect when you have hidden non-public information that's coming out of a top-down control society like China. I'm just suspect of it. I just don't know. I don't know. I mean, we'll see. I mean, but nothing, all the magic comes with a price, and I just don't see how you're able to go from needing 100,000 GPUs to only 2,000 GPUs and do better. It's just something has to give. And I guarantee you ChatGPT, Anthropic, so forth and so on, are not going to be telling you everything that they're working on. Just not.
Right.
And I mean, they're Grok is probably a little more transparent, but Elon Musk has the XAI, which is a part of the family of X companies that are out there, including Tesla and SpaceX, has the largest concentration of GPUs on planet Earth. And you cannot tell me that whatever's being said surprises them if it's true.
Yeah. So that's where you get into the argument that the AI platform should be open sourced versus, some sort of industry secret or some sort of IP. And so this model apparently is open source. This DeepSeek is open source, so you can read the code and you can figure out. But it's not to say that, code can't be manipulated or there's some kind of something going on in the background. But
and we also don't know, they may only have 2,000 GPUs, but there are a lot of blockchain based artificial intelligence systems that are out there, Bitensor, Moss, a few other ones that I can't recall off the top of my head, but they're creating decentralized systems to run large language models, to run specialized AI agents on. Who's to say that this is not you? I mean, I don't know. I'm not an AI expert, but who's to say they're not tapping into some of these decentralized protocols in order to have kind of a backdoor to more compute power that they don't have themselves?
Yeah, I mean, this is sort of par for the course with China as a country. And this is one of the things that made Trump so angry and why he's so, hell-bent on finding a solution to stop what China's doing. But even if you're a small seller on Amazon, you run into these issues where a Chinese company pops up and starts making your product, and the process to sort of say, hey, Amazon, you have to stop selling this product is so cumbersome and so expensive that it's almost not worth it. And so you have these companies all across the country that have this platform of selling e-commerce, and they get some competitor out of China cheaper, fulfilling these orders for these products that they used to make.
Oh, I mean, I've seen that firsthand with a company we used to run, would have a product ripped off, sold at double the price on Amazon. And now you try as a small manufacturer to get your product on Amazon. It is not easy to do. And then, like you said, getting they were drop shipping essentially.
Right.
And so by
drop shipping is this idea that you have no inventory, that you order from a company, you order from company A to send to client or customer.
Correct.
You don't have to ever hold inventory. You're just a third party intermediate.
Yeah, so they
but
buy
you
from
earn
you,
the shipping fees.
buy from you, sell it at double the price on Amazon, ship it. And some of those things are very complex and it's not easy to track. And then just blatantly ripping you off. And when I woke up this morning to the news, I instantly thought about, you can go and buy a Milwaukee drill. I got a couple of them. Had a couple I got a pair of them that's 10 years old. They work great. Battery doesn't last as long as it used to, but still performs excellent. It's like, okay, well, you can go spend $400 and get you a set. Or, if you're tight on money, you can go to Harbor Freight and get the Chinese knockoff. It works just as well. It's not the same. So it's like, okay, are we going to really go to the Harbor Freight of artificial intelligence and be shocked that I don't know. It's just, but I tell you this though, whoever wins this is going back talking about Trump and the administration, and it's not just Trump. Behind closed doors, Democrat and Republican politicians and leaders they all agree that whoever wins the AI race is going to dominate the next 100 years. And it is extremely important. It's a very powerful technology. And this is probably going to shake some things up in Washington to make them be more protectionist as it pertains to that technology, be more friendly. Maybe even we saw Biden do the CHIPS Act, try to get the actual production of the
Foxconn?
Well, no, so you have AMD, then you have NVIDIA. They'll design their chips and they'll have them manufactured by, say, ASML.
Mm-hmm. Or TS.
Fab. Yes,
Taiwan Semiconductor.
the fabrication, to get the fabrication occurring on U.S. soil, so that it's not at risk if Taiwan gets invaded. Our supply chain is not disrupted. So probably going to see some things coming along, maybe tax credits for setting up these power plants to power these facilities. But make no mistake, this market, NVIDIA is one of the top 10 largest companies on planet Earth, and they just got whacked by like 20% at the market open. So AI race is extremely serious, and the imputed future value of our economy, if you want it to be worth more than it is today, we have to dominate the AI space. And it's way beyond just going on to ChatGPT or Grok and, write my term paper for me. It's the implications are greater than the invention of, the plane or the car.
Yeah. So the other question is, because we know historically, and this is not like a bash China show, but we know historically that China does borrow, we'll say, a lot of IP from American companies. I mean, this has been happening for decades now. And that's why you see a lot of companies like Apple, Tim Cook is in China all the time. And it's because, you can have sort of the ear of the people in charge to make sure that any kind of generic items that pop up that look like your device are kind of solved, because you have, focused so much time and energy on this one market. So I would be interested to see how much of that is the case with this DeepSeek. How much of it is actually, attributed to other companies that they're just kind of repackaging. But for it to kind of shake the markets and to people be talking about it, I'm sure everyone listening to this is going to hear it all over the news, and they're going to be like, what in the world is this? It's a big deal. And, whether that's a short-term big deal, it's yet to be seen. I mean, we're not seeing any, our indicators don't generally tend to work intraday. We generally have to wait till market close to see what happened.
And the Russell 2000 is barely even being touched by this.
Really?
Yeah, and the Dow. It's just the NASDAQ.
Yeah, that's
really,
true.
at the end of the day, I mean, we're almost positive on both the Dow and the Russell 2000 right now. So again, great buying opportunity for long-term investors to take advantage of these types of dips. If you're an opportunistic investor and you sit on the sidelines and you look for opportunities, this is what you want to see. You want to see kind of opaque headline, don't really understand what's going on, things that drop the market. Sometimes that's a great opportunity to deploy capital.
That's right.
And we'll see. We'll see. I think it's going to be interesting. That's for sure. Just to see how it all pans out. But I don't know. And I try to, when speaking either here or any public speaking engagement or whatever it is we do, I always purposefully try not to fall into the language that shows you're contemplating, like so or maybe, but I don't know, and start trying to understand everything that's going on with these new technologies. It's kind of hard to do that. So pardon my ums. Yeah, today.
I mean, that's we had that as one. If you look at the show notes that we're looking at, it's one line of DeepSeek, because I was writing this last night, and then the news kind of broke and everybody's going crazy about the market down. But so we wanted to highlight it at least.
Yeah, let's look at bond market. Treasury yields decline, meaning your bond prices went up a smidgen. So nothing really to look at. We still need to see that 10-year come down if we want mortgages to be more affordable.
Yeah, I had a conversation with a client about bond positions last week, because we're just looking at the positions that we're in, which are, sectors of the bond market. We have an aggregate, but we also have, some high yield and some corporate, and, they're not really doing much right now.
No, but we did have the dollar weaken.
Yeah, there you go.
So we're
worst week since November 2023.
Which you would say, okay, worst week for the dollar. Is that bad? We want the cost
of inverse relationship.
Yeah, we want the cost of capital to come down one way or another, and we're teetering right there. We're starting to kind of see. We're going to have a Fed meeting. Is the Fed meeting this week?
Yep, it's Wednesday.
I don't really care about interest rate cuts right now. What I want to see is what they're going to talk about with quantitative tightening or quantitative easing.
So here's the interesting thing, and we can kind of look at. We'll kind of progress in the next section here this week in focus, but Monday today we've got new home sales data that'll come out. Tomorrow's gonna be durable goods. Wednesday is our interest rate decision from the Fed, and then Thursday we have the 4Q GDP, fourth quarter GDP. So that coming after the Federal Reserve meeting, I'm assuming they will have access to some of that data.
Yeah.
And so what would be interesting to see is if on Wednesday they decide to pause, which I think there's a very good chance that we can see.
I don't think anybody's expecting cuts this week.
Yeah, I think that they will pause. And then I would also expect that maybe we'll get sort of a bump in the market on Wednesday or Thursday based on the GDP. I feel like if the Federal Reserve decides to pause, and based on what the commentary is that they say, and then we get the GDP numbers and they come in, as expected or better than expected, then we could see the market respond accordingly to that.
And if I was betting on it, I would say a beat on GDP, simply because of how much consumer confidence increased in the fourth quarter post-election, small business confidence, and then your average consumer confidence. Generally, that leads to more spending in real time.
Yeah.
So it'd be very interesting.
In what though?
So your small business confidence is confidence about your profitability in the short term, and then consumer confidence is just simply willingness to spend. So your small business is going to be driven by deregulation, lower taxes, more business friendly environment in the country, and then your consumer confidence is just people. And we have this after most elections anyway. If you, regardless of the party, it's just kind of over. People stop worrying about it and then get to spending. We're going to see also, because inflation nominally does affect how much people spend. So you have to adjust for inflation to see what kind of real growth you have. But I would bet for a beat would be good for the markets. And then we need to really pay attention to what Jay Powell says as it pertains to their quantitative tightening, because the repo markets, which we won't get into all that, but the repo markets are kind of drying up. The Treasuries account, the TGE I think it's the TGE, is going to start being spent down. After that, we're out of liquidity. So the Fed's got a decision to make. Are they going to continue to roll fixed income assets off their balance sheet, or are they going to pause? Or are they going to...
You think they'll make a determination about that this week, though?
I think they're running out of time to do that. Because
this is the first meeting after Trump's election. So Trump has been president for 5 days, 6 days, 7 days, something like that.
He may roll in there and put Jay Powell in a chokehold. I don't know.
First time we'll hear from them since Trump has taken office. But their insight is going to be kind of interesting. Because the other thing you have is sentiment of consumers in the market is starting to improve. And it's interesting because that's sort of tied to how the market performs. It's sort of this self-fulfilling prophecy. So when the market starts to go up, all of a sudden people,
it's the wealth effect.
People get excited about the stock market.
401k is up. You feel like you can go on vacation this year.
Pricing is directly related to consumer sentiment when it comes to the market. By the same token, you wake up in the morning and you see the NASDAQ down 3 or 4% or whatever. What's down? I don't know what it's down now, but it has the opposite effect.
Yeah, it's the wealth effect. Happens the same way, longer period of time with people's home equity. A lot of times, if your home increases in value, you don't feel the pressure to save as much as you otherwise would. Ergo, you spend more money. So it's the wealth effect, which is good. And one thing I also noticed over the weekend with commentary, a lot of the talking heads really kind of in the weeds of the financial industry, was this competing idea of is the market topped and where's the pullback, to where's our blow off top, like we're going much higher.
Yeah.
And we talked about this in December, the last Momentum Monday we did for 2024, that as we start to really get into the bull market, you got to be cautious of people telling you that it's going to go back down or that it's going to go to the moon. You got to take these things with a grain of salt. But when you're seeing things like the Consumer Confidence Index listed here, that's the really good sign. I pay way more attention to that than I do some fund manager that's trying to talk their own book because they have a short position or a long position.
That's a good point, and it kind of highlights also the aspect of sort of the DIY type investor who might like to just go into index funds and hold them for a long time. And it's fine if you want to hold it for a very long time and not, get get sort of spooked by movement of the market,
or pay attention to it.
yeah, that's fine.
Yeah.
But what happens a lot of times is that people go into an index, particularly now when the S&P and the NASDAQ are almost the same holdings, at least in the top 10.
Mm-hmm.
And so they're very heavily weighted toward AI, very heavily weighted toward tech. You've got your Apples, your Metas, your, all this kind of stuff, Googles. And so they tend to have much more volatile swings than they historically have had maybe. And so it becomes harder just from a psychological standpoint to just hold, because what a lot of people want to do is just sell it and I'll buy back in later, or I'm doing my $100 a month or $200 a month, or how I'm maxing out my Roth $500 a month, and the market takes a dive. I don't really want to do that. Let's pause for a little bit and let's start later. That's why we always really encourage people not to think of it that way.
Yes, if we go back to, now I understand if you have a short, this is why you have to talk with us or your trusted financial advisor or wealth manager. If your time frame is short, you got to be careful in the market. Your emotions are going to drive you crazy. If you have a long time frame, you can ignore a lot of the noise and really stay the course. If we go back to before COVID, really before the pandemic was declared, let's go back to February of 2020. NASDAQ was at 9,500. It was at all-time highs. Okay. Now, a lot of people during COVID, NASDAQ went down 30%, maybe 40, down to 6,800, low of 6,600. I'll just wait. I'll just buy back in. Well, if you just go simply to August, NASDAQ 11,000, you would have doubled your money.
Yeah.
From March, and then you would have made an additional 25% from the previous all-time high. Well, maybe I'll wait for another buying opportunity. So the market's nice and hot. November 2021, NASDAQ 16,000. Maybe I feel comfortable about it. What happens next? We go down. October 2022, NASDAQ 10,000. Maybe I'll buy in later and wait for a better opportunity. Now we're sitting at NASDAQ almost 20,000. So yeah, we can have an entire show dedicated to, 3 reasons why that happens, is going to continue to happen over and over and over again. And you can't have a recency bias in the market. You can't think just because the number went up that the number has to go down. And that's something that the average American for the last 100 years has really struggled with because of how terrible the Great Depression was, which was under a completely different monetary system, under a completely different approach by the Federal Reserve, under a completely different banking system. And as a result of that, people always thought it's going to happen again. So if you lived through the Great Depression, you didn't want to repeat it. If you're a child of someone that lived through it, you remember them talking about it and you would always get scared. And then even us, as we sit here, remember conversations by grandparents and great-grandparents talking about it, and it's still kind of embedded in our collective psyche. But you have to remember, we're not in that same system. The market is going to go up and it is going to go down. But over the long run, as our economy improves, as you have more stuff, as you make more money, the market is simply going to reflect those activities with a higher number over time. Can't say guaranteed, but over
a long period. Over a
long period of time.
Corrections. There will be recessions. There will be other things that come along.
Yeah, I mean, an asteroid could come and blow everything up, and it wouldn't matter. But you have to assume that business continues as usual, and it does. And this is why the rich get richer and the poor get poorer. Is you have to change. We won't get into all that, but you have to change your mindset and your approach to the market. And that's why working with professionals such as ourselves is a great idea for lots of investors, because we can come and provide that confidence, clarity, give you a better portfolio, better strategy, and it really helps you filter through the noise and stay the course so that you can go from NASDAQ 6,000 to NASDAQ 20,000, 3.5x your money in less than 5 years.
Reap the benefits.
Yeah, that's great. I mean, it's a great way to approach things. We believe the way we do it because we obviously think we're, we like what we do.
Talented.
We're talented. Talented.
So the last thing would be PCE on Friday. So that's going to be another key gauge for the Fed's inflation assessment.
That's their preferred gauge.
That's right.
CPI gets a lot of headlines. PCE is actually what the
Personal
Fed cares
consumption
about.
Expenditures. What that stands for. So we'll...
Anyone been able to get any eggs?
Nope. We have not. That's why we asked y'all for eggs.
Got no eggs. My chickens ain't laying. They're on strike.
Well, you should treat them better. Give them better food. Let's see. All right. So we'll wrap it up here. We won't belabor the point, but just last week showed sort of an increase in the resiliencies of the equity markets, sort of shifting in dynamics. And we just want to remain vigilant, basically, is what it is. Diversified and disciplined investment strategies are really important, as we talked about. Last thing we'll hit on is just this interesting chart that I found of stock market's typical performance over presidential cycles. You'll see that in that document that I sent you. But basically, let me pull this up so that I can.
Are you sharing it?
Yeah, I'll put it on the screen. But I'm going to find the actual one right here. All right, so
I love that third presidential year term.
Yeah.
Love
So
it.
the seasonality, this is going back to around 1900 is what this chart shows. S&P tends to have sort of a choppy upside into mid-year after working through sort of
That's a 10% gain. Well,
turbulence in sort of
peak to trough on that first presidential year.
yeah.
We're 5 to 12. So that's a pretty big difference between now where we're at now and where we're at going into the summer. If this were to repeat exactly, right? You're looking at
And these are just averages.
8 to 10% gain.
So what you tend to have on the average going back to 1900 tend to have sort of a choppy January, February, which we've sort of seen. February we're going into, we'll see what that bears. And then potentially Q3 is where it gets sort of ugly. So we'll see if that happens. Who knows what these are just interesting things that we look at. This is not something we used to trade on. And this is not saying that this is what's going to happen, but just historically looking back over these trends based on presidential cycles. That's all this is based on. This is what we would say is on average, not even what we would expect. I started to say what we would expect to see, but we don't even expect to see it. But it's just an interesting anecdote to look at sort of the election year versus the first presidential year, the choppiness of the January and February, which we definitely have had going even back into December before he was elected, or before he was in office rather. And then into your second presidential year, which is sort of, a little choppy still sideways. And then, to Matt's point, the third presidential year sort of skyrockets. And it'll be interesting to see what happens with Trump specifically, because this is sort of like a first-term president, I guess, but he's already been president once. So when he gets to the end of this, he can't do it again. And so we'll be interested to see what happens there. What kind of footing is it?
Yeah, because it's really the fourth presidential year, or the fifth. It's really his fifth. And there are some interesting dynamics with that you have to go back to the 1880s to even try to see how, Grover Cleveland was different in his second non-consecutive term relative to his first. It's going to be interesting to see.
I don't think there's there is no there's no
modern precedent to really look at.
Well, I was going to say there's no way to say that this is not that Trump 2.0 is not different than Trump 1.0, because it's very clear that there are some key differences in these two administrations.
Oh, yeah.
Even this close apart. I mean, I would hope that people's memory is at least long enough to remember the first Trump presidency.
Which was generally good for business, but definitely less discipline.
Yeah.
Less, from the public's perspective, less focused. I think what we've seen in the past week is regardless of what you think, is a testament to how good his chief of staff is at the Sandy Wiles.
I don't think her name is Sandy.
I think it's Sandy, isn't it?
Susie Wiles.
Susie Wiles. Yeah. I think she's like 65.
She ran the campaign for him.
Just super disciplined, super intelligent. And I think that, that's good. You want good, smart people around your country's leaders to help guide and stay focused, especially Trump, because his instincts are kind of, at least what we see, and we don't know him obviously, but at least what you see,
he called me the other day.
I'm sure he did fundraising
during the election.
Sure. Yeah. But I'm sure it seemed, the public's perspective sometimes is kind of a fly by the seat of your pants approach, which, disruptors can have, and that's fine. But to see the discipline, that's from market participants, we want to see business friendly leadership, but also, a steady hand, which you don't always get. I mean, we don't get to, nobody's perfect, but
I don't even know if I would describe it like that. I would describe it as somebody who, by Trump's own admission, he didn't know how the game, I'll refer to it as a game because it is a game. He doesn't know how the game was played in the first term. Didn't know. He didn't know anybody in there. You know, he had donated money for decades to all these people, but that's you're far removed from that. And so now he has the benefit of the first 4 years, then the next 4 years, sort of building and in the background working,
learning from mistakes,
and then these 4 years. And the difference is, you know, almost night and day. I mean, you can see it over the weekend. We had this issue where the federal government, whatever, it's not a commentary about immigration, but they're trying to take the Colombian people that were in the country illegally back to Colombia. And the president of Colombia didn't accept the plane. So Trump puts out a tweet or whatever, which is, I guess, the new fireside chat or the new, way that the president, talks to the people or talks to the public. And then, it wasn't even an hour before they said, yeah, we'll accept them and I'll send my personal plane to get them. And now I know that there was some speculation that he was not wanting to accept them, that he was just wanting them to be treated fairly or whatever. I don't know what the gist of it was. But, somebody made a comparison about that big long tweet about historically how these things are done. You have these departments that go through this process and they get involved with this group, and then they draft these letters and they have to send it to this, and it could take weeks to respond to this. He pulls up a tweet, fires it off, for better or worse, the problem is solved.
Seems to be efficient.
That's not something that I don't see him doing that in the first term. So I think he's definitely had a learning experience. I definitely think that he is tired of the bureaucracy, and I would say that probably most Americans are also tired of the bureaucracy. So, I think it's a positive thing.
Yeah, I mean,
you can really see it in his poll numbers. He's got a higher approval rating now than he's ever had. This never happened before in the second term.
Congress, the House of Representatives is meant to be a little more quick, more populist. The Senate is where things go to really chill. And so there is a process.
Chill they do.
Yeah, for decades, right? Yeah, chill and chewing on the fat of the taxpayer. But it's supposed to be a process. And then you have the executive, which is, a muted hybrid kingship of sort, as the executive of the country, as a monarch light. That's the way our founders designed it. And so there's all these checks and balances. You're staring at me like...
I don't know that I would use that term, but yeah.
Well, I mean, you get the point of what I'm saying is the founders designed it to where you have these... some things act fast, some things act slow, some things have authority that are going to be checked by other branches of government. But what they did not anticipate or did not desire was to have the entirety of the federal government be bogged down by bureaucracy and act slower than even the Senate acts, or slower than even the Supreme Court takes up cases that may take a decade to get to the Supreme Court.
Yeah.
Or the Senate may take them 2 decades before something is actually changed of importance. And so I think it's good for the taxpayers to have an efficient government. So, as far as that goes, we're all rooting for more efficiency and transparency in government. Now, as we sign off here, I will say a lot of exciting things coming up in the market this year. I've used that word a lot, exciting. This year, we had optimism before last year. I think this is exciting. And things that we're...
is that what we're using? Okay. We've had optimism for the past 2 years. We had cautious optimism, and then we dropped the cautious last year.
Now we're exciting. I think that where you have the convergence of artificial intelligence, blockchain technology, robotics, genomics, these things are going to really reshape our world, and we're paying very close attention to how our clients can, in a very low-cost, liquid, and responsible way, get access to these sectors. So if that's something that interests you, feel free to reach out to us. We were very early on in allocating crypto, which has done phenomenally well for our clients' portfolios. And we want to take that same approach, which was, had our due diligence, very prudent, our research and finding liquid, efficient, and low-cost ways for our clients to access these new sectors that are popping up so that we can add extra alpha and add extra growth potential to your portfolio.
That's a very good point. And it makes me think about another conversation we had last week with a client about, she was called into an insurance meeting and had an expectation of how the meeting was going to go, about talking about, her insurance needs and things like that with another company, not us.
We do own an insurance brokerage for those that may not be aware, and we do that to help our financial planning and investment
for reasons
clients.
Like this
Correct.
Example, where they brought this particular client into the office, and then it became a sort of a sales thing where they had a product they wanted to sell. They were going to
talk her into doing it.
They were going to talk her
come
into
hell
doing
or high
it. She
water.
didn't feel comfortable with it, so we talked to her last week, but I don't know how many calls every week I get from wholesalers or companies wanting to sell our clients products or wanting us to get on board or whatever. We have a very strict process.
It's relentless. And if you think that you're annoyed by the scam calls, your funding is secured, press 9 or whatever,
your file's going to be closed.
I would venture to say just marketing emails alone, I get more than 500 to the business account, and then maybe a dozen calls a day. And that's so 500 a week.
Yes.
So it's 100 emails a day marketing. So it's filtering through that noise.
Yeah. Well, we do filter through it. It's very important because things like that, like you were talking about, where these up and coming sectors, these new things are coming out. We've been in crypto, Bitcoin, Ethereum, some of the large cap digital stuff that's in that holding. We've been in it for a while. We're now starting to see fund companies start to add these Bitcoin products where they're, downside protection or whatever it is. They've got all these bells and whistles on them. They want to sell them to people. And for us, it's about going through and making sure that everything we do fits the narrative of the firm and fits the culture of the firm. And it's very important to us. We've built this from the ground up with our own hands, and we want everything to sort of further the culture that we've built amongst ourselves and amongst our clients. And so rest assured that we're not going to be swayed by up and coming brand new things that are not well researched and well thought out.
Reminds me of I think 3 weeks ago, right at the turn of the year. I mean, you had a conversation. You were in a meeting in Louisiana, long-time client, talking about venture capital.
Yeah.
Done very well for himself. His business doing great. He's got some excess liquidity, looking to deploy it, and it's very easy to get distracted by shiny objects, right? And you think, well, what can I do with this limited partnership, or what can I do with this venture fund? And just a few seconds of us having that conversation, I already knew the best way for that client to get access to that sector in, again, a low cost, efficient, and fairly liquid way. And, just having that conversation can save a lot of heartache, locking up money for 5 or 10 years, paying 8 or 9% fees. Whereas, we can give someone access, if it's appropriate for you, we can give someone access to those sectors that we have already done our due diligence on for 1.5%, 2% cost, maybe even less than that. So you're looking at a substantial decrease in cost, liquidity, which is important for investors so that, situations change, timeframes change. It's really not a good idea to lock your money up for a long period of time.
Private REITs.
Oh, God. God almighty. Yeah.
Especially now.
I mean,
we'll leave that conversation for another time.
We'll talk about that later.
All that to say, our interest is very much aligned with the clients. And we're going to bat every day to try to cut down on the amount of distraction this industry, just by the nature of being in the industry, kind of generates. And so there'll never be a time where we'll call any client into a meeting and try to have a sales pitch to them. We don't do that. That's not what we believe in. So we'll kind of wrap it up here. But we are still
is so boring.
Yeah, well,
it really
it's but it pays well. That's the thing. The products
salesman.
That's exactly right. So with the products that doesn't take a whole lot of work, and the commissions are they're much less than they used to be. I mean, I remember
hearing about people getting 10 and 12%, 15% commissions.
Just nuts. But that's where it lies, and that's why you want to work with an advisor who has your best interest, who's a fiduciary. And that's the only reason we open the insurance agency. Momentum Protect is what we call it, just to do stuff like that.
And there's a lot of zero commission insurance options now that did not exist that we're able to really use, which, we don't care about the commission. It's irrelevant. Some insurance companies, there's no other way to get around it. Let's say a term policy, they may pay $100 commission or something. Yeah. It's irrelevant to us. But now we are getting access to a lot of insurance products that have no commission built in, which is great for the client, gets you higher returns and lower cost. So, those things, when you're working with a fiduciary and you're working with somebody that really enjoys what they do and is very knowledgeable, you can filter through all that and not have to, worry about a State Farm agent or a Farmers Insurance agent trying to sell you an annuity so they can pay their mortgage that month. Unfortunately, that happens. So any questions about any of that, always feel free to reach out to us. We don't do property and casualty insurance, but just a simple conversation, probably once every other week, we save our clients thousands of dollars on just talking through how you can go and get cheaper homeowners insurance just by quoting it out, by checking out other companies. Don't be loyal to the State Farms of the world.
Too.
Yeah, I mean, shop out Progressive, shop out Geico, shop out different homeowners insurance that are out there, Lemonade, et cetera, et cetera. So anyway, we keep getting on tangents. We're going to let you run. Enjoy the week.
We are still doing annual reviews. So if you haven't done your annual check-in yet or scheduled that, hop on the calendar. I think we are booked into like middle to end of February at this point, but go out. Our calendar should be open. You can go out and pick a time, and then we will, definitely get back with you and do that check-in. We at least want to talk to you and make sure everything's going well.
Yeah, absolutely.
But that's it for us. We are at the 50-minute mark, so I think that's pretty decent. But we will let you guys go. I hope you have a great week. As always, if any questions, feel free to email, text, call, and we will get back with you. There you go. We will see you next week for another episode of
Take care.
Mondays.
Yeah.
Goodbye.
See you soon.